This video we're covering FEMA due diligence for overseas direct investment ODI, what it is, why it matters, and what goes catastrophically wrong when Indian companies skip it before investing abroad. Let's get into it. What is ODI and what is it doing wrong? ODI, overseas direct investment, is when an Indian company or individual invests in a foreign entity by acquiring shares, providing loans, or extending guarantees. It is governed by the FEM Overseas Investment Rules 2022 and FEM OI Regulations 2022. Three groups are doing this and getting it wrong. Indian startups setting up subsidiaries in UAE, Singapore, or the US to raise foreign capital, promoters and HNIs acquiring stakes in foreign companies through personal or corporate investment, and listed companies making strategic overseas acquisitions under the automatic or approval route. Why FEMA due diligence for ODI matters? ODI is not just a wire transfer. Every rupee that leaves India as investment must meet three requirements. One, it must be permitted under FEMA OI rules. Not all businesses can receive ODI. Gambling, real estate broking and activities prohibited in India are off limits. The foreign entity's business activity must be checked before investment. Two, it must be routed through an authorized dealer bank. Every ODI transaction must go through your AD bank with a Form FC filing. Transfers made directly to a foreign entity without AD routing are unauthorized remittances. 3. Ongoing compliance. Annual performance reports and share certificates must be filed. WinZO lost Rs 590 crore in bank assets, partly because its ODI structure failed its test completely. Real case, WinZO 590 crore seized. Rs 590 crore, this is what ED Bangalore seized. Bank accounts, fixed deposits, mutual funds and bonds under Section 370A of FEMA. WinZO invested $54 million into US and Singapore subsidiaries as ODI. On paper, it looked legal, but the foreign entities had no real employees, no independent operations. They were run entirely from India. And the foreign subsidiaries were into online gambling, which is prohibited under Indian law under the Prague Act 2025. Rule 19(1)B of the FEM OI rules is clear. You cannot invest in businesses that are prohibited in India. WinZO violated it, and the consequences were Rs 590 crore in seized assets. The FEMA ODI due diligence checklist. Before any ODI investment, run through this checklist. Is the foreign entity's business activity permitted under FEM OI rules and under FEMA or under Indian law? Is the investment routed through an authorized dealer bank? Is the ODI within the automatic route limit 400% of net worth, or does it need RBI approval? Are annual performance reports filed every year by December 31st? Do the foreign subsidiaries have real employees, real offices and independent operations? Is the foreign entity an FATF non-compliant jurisdiction because that requires additional compliance? And have all loan and guarantee structures been reviewed under the financial commitment framework? What happens when ODI due diligence is skipped? The consequences are severe. Penalty up to 3 times the ODI amount of every FEMA contravention per transaction, not per case. Continuing violation, Rs 5,000 per day from the date the contravention began. Asset seizure under Section 37A. Equivalent domestic assets can be frozen and seized even if the offshore investment looks clean. And missing the annual performance report deadline of December 31st is a separate standalone FEMA violation every single year. Planning to invest abroad? Get the FEMA due diligence done before the money moves, not after. At FEMABIDE Advisorz, we run the complete FEMA ODI review, business activity check, AD bank routing, APR compliance and financial commitment structuring before the first rupee goes abroad. DM ODI on Instagram at FEMA_consultant. Visit FEMABIDE.com or WhatsApp us at 9933385556. Don't guess with FEMA. Call FEMABIDE Advisorz.